Hello, good afternoon. So let me reintroduce myself. I am Christina Doherty from the Commuting Students Office, and I am welcoming you all to our financial wellness session. I think it's about time for us to begin. So we're actually going to start off with Forex trading. And with us, we have Jakeem Wilson from Strictly Charts FX, and he will be giving us the breakdown or the information on Forex trading and basically what's it all about. Jakeem?
All right, good afternoon, everyone. Good afternoon. I would firstly like to say thank UE Commuting Office students for making me a part of this initiative. And I'll definitely say I had to accept this invite because when I started UE and was going to UE, one of the main problems I had was my commuting because I lived far from school and so forth. And unfortunately, this was one of the main reasons why I had to basically drop out of school. But the good thing about it, that was one of the reasons that I have found Forex and become today who people know me as Forex professor. So just a quick insight on my journey, my UE history and so forth. So when I started UE, just like many people, never know what I wanted to do. Going through UE, just doing it for my parents and so forth. And I was just there depressed, right? Depressed and doing something I really don't want to do. So going through the process of what a lot of people do, I was there, never know what to do next. So I was like, how can I make something good out of this? So going through this process, depressed college student, I ventured and tried different things. So that's how I found out about Forex. And once I found out about Forex and realized I could generate a certain amount of income, I was like, this UE thing is not for me. Don't get me wrong, there's different people who have different paths and so forth, who believe in a college degree and getting a job. But for me, I found my purpose when I found out about trading. Right? So why am I doing this? I see this as a platform and a reason for me to express the things that I've learned over the years and the benefits of what the foreign exchange market has provided me with. The monetary aspect, I would just say, is the cream of the whole, crap. But the mental and the mindset and the person who I've become throughout this journey is one of the main things, the main beneficial aspect of my journey thus far. So going through this process, found out about Forex, and I started this process and so forth. And this was the birth of Strictly Charts FX, which is the organization that I'm a part of, one the main founder and so forth. So what exactly is Strictly Charts FX? Strictly Charts FX is a financial empowerment group geared towards improving the financial literacy and security for current and future generations, just like U students, UTech students, individuals, adolescents, teenagers and so forth. But not only that, we're providing you with a skill set, we're also providing you with the mindset to achieve that common goal of financial freedom, because everybody here going to school and so forth, one of your main goal is to be financially free. And I mentioned something earlier, the mindset, right? So let's just put a quote around that word, the mindset. So today I'm here speaking about Forex and financial wellness. What exactly does that mean to me? First of all, are you guys hearing me clearly? Let me just get that straight.
Yes, Jakeem, we're hearing you perfectly.
Wonderful. What does financial wellness mean to me? Well, financial wellness, to be honest, involves a lot of factors, right? It not only does it involve somebody who follows their strict budget, somebody who, you know, micromanage their spending habits, it involves an umbrella of things, right? And one of the main aspects when it comes on to financial wellness is your mindset, right? Because without a rich mindset, you cannot be financially free. You cannot achieve that financial freedom or that financial independence that we all strive for, right? So one thing, if you think poor, if you have a poor mindset, no matter how much money you make, and even if you have a poor mindset, that would likely be the case of you not making a lot of money because naturally you just think poor. Like if you realize there's a lot of people who win the lotto and after a few years or even a few months, guess what happened to them? Them end up broke again, right? You have athletes who go through maybe 5 seasons, millionaire athletes, and maybe 5 years after that, them broke. Why? Because they have a poor mindset. They grew up in a home, a family, a middle class family. They went through the school system, the education system, who one don't teach us about money, right? When I was going to you, I never learned nothing about money. Reality, they was teaching us how to become employees. Nothing is wrong with going to university, Don't get me wrong, because education is key. But the whole aspect of you getting that education, eventually being a part of a business, being an employee, earning money. Once you start earning money from an employer, one, you're going to have an employee mindset, right? You're not going to necessarily have the skill or the skill set to say how I could flip this money, how I could generate more money from this money. Because once you get that paycheck, guess what? You're no longer hungry again. Now you're going to see how you can spend that paycheck. You're not necessarily looking at how you could invest that paycheck or how you could make that money work for you, right? So with even having strictly charts effect, this is how we're providing a platform to show individuals how you could make that money work for you. So one thing I want you guys to remember, without the proper mindset, so everything starts from there. You could be so skilled, but without that proper mindset of how you look at money, how you respect money, how to be indifferent to money, how to not have certain emotional attachment to money, that is what is the catalyst for you to, those are the things that you need to first develop for you to become abundant, we would state, right? So until you change your mindset, money won't help you, right? So growing up, being a part of certain peer groups, going through school, we hear things like money doesn't make you happy. I want you to type a yes in the chat if you have ever heard that. You ever heard the term money doesn't make you happy? There's about 17 participants. I need to see at least 10 people say yep. The next one we hear is money is the root of all evil. We have heard that continuously over and over. More money, more problems. All of these things are things that they basically brainwash us with. But in reality, if you listen to how a rich person communicates, if you grow up in a household with individuals who are entrepreneurs, who have achieved some form of success, you'd see that they have a different perspective when it comes on to money. And there's a lot of time you hear some people be like, oh, rich people are greedy. And they have others who be like, oh, I don't care about money. To be honest, if you don't care about money, the money won't care about you, right? And I've seen over the years is that rich people are not necessarily greedy, because for you to become rich, you have to be a producer. You have to be producing something. You have to be providing employment, one, as an entrepreneur. You have to be providing a service. So you have to be on the producing side and not necessarily the consuming side. The consumers are the ones that are actually greedy. But you have to look at it two ways. There's two aspects of greed, right? So you have negative greed and you have positive greed. What I'm really getting to is the fact that when we talk about positive greed, it's the way of saying Abigail wants a better lifestyle for she and her family, right? Ashley O'Connor wants to experience certain things that could make herself rich, not even necessarily financially, but just experiences. That is what you call positive greed. You want a better lifestyle, you want to improve your lifestyle, right? And you have a next aspect that's known as negative greed. This is where you go against people's morals, values, and so forth, where you take advantage of people just through the means of getting more money. So it's just the way how we were taught to think about money that we have to unlearn and relearn. And as I stated before, this is not necessarily something that we learn in schools and so forth. So one aspect is start changing what you put your attention to, right? And so forth. So money can't buy you happiness. That's what a lot of people say. First of all, money could pay for you to go on different vacations. Money could buy you a jet for you to travel the world. And for me, that's a form of happiness. Money could pay for your gym subscription for you to have better health. Those are the things that what will fuel your happiness. So when you have that idea that money can't buy your happiness, you're looking at it from a direct perspective. But money is the tool that pays for the different things. Money is the thing that pays for the services that will allow you to become more abundant, allow you to, experience different type of lifestyles, right? And once you start going through those processes and seeing what is out there for you, you'd realize that the perspective that they basically brainwash us with money is basically a lie, right? So we just have to start reconditioning our mind first. And as I stated before, Strictly Charts FX is a financial empowerment group that provides you with both the skill set and also the mindset. Because you could have the skill, and I'm not sure if anybody's in here who is a Forex trader or who have done Forex already, but I have somebody here with me who is definitely somebody who has generated some form of income trading Forex. And he could tell you that even when you have the skill, if you don't have the mindset, the psychological aspect of Forex, no matter what, you're not going to be a consistently profitable trader. So everybody following so far?
Yes, Jakim, it's just that you're not seeing the responses.
Oh,
There,
I'm not?
no.
Well, I'm focusing on the Zoom chat because we're talking on Zoom, right? All right. So
Yeah, and
good.
afterwards we take the questions.
Yeah, we're saving the Q&As for last, right? All right. So truly, imagine a world without money. We basically go back to what? The barter system, right, Jamar? That's what they call it, the barter system. But in reality, what we need to do is identify the functions of money. Because the world we live in, we don't go through the process of them teaching us about money. So first we have to identify the function of money. And what I stated earlier, money is a tool that we need to know how to utilize. So the first piece of value I'm going to give today, if you guys never got any value thus far, is my money management skill that I utilize, that once I get that money from trading in the foreign exchange market, or even before that, the specific money management aspect that I utilize when it comes down to the tool or the commodity of money. So first thing first, the foreign exchange market is a $6 trillion market, right? It's the largest financial market out there. And one of the main questions or the mood of this session is how the Forex market can be financially profitable. It's the largest market, so that alone basically put it on a pedestal. But with us gaining that money, that is just the first step. We have to know how we distribute that money, how we make that money work for us. So I'm glad we have 876 Invest here with us today. So I could also speak on the fact of how I have done a specific aspect of gaining that money through Forex and utilizing that cash flow and investing in other things such as stocks or our next business or so forth. So first thing first I'm going to provide you with is my money management aspect. So let me see if I'm actually a host. Can you make me a host, please?
You can share your screen.
Oh, wonderful. All right, so are you guys seeing my screen at this moment? Wait, it's your screen? Yeah, perfect. Ooh. Are you guys seeing my screen at this moment?
At this moment, it's currently white.
Yes, it's a whiteboard screen. So I'm going to be showing you guys my money management aspect. So say for example, I got $1,000. We're just using a raw figure, right? So let's get that here. All right, and for the saving of time, we're not going necessarily be too neat, right? So we have $1,000. How I look at this $1,000, I look at it in three ways. One, learn from the book, The Richest Man in Babylon. You have to ensure that you put 10% of your income away. So that's the first thing we do. That is automatic. For the individuals who go to church or be a part of any sorority clubs or anything like that, the first 10% we put that away, right? So that's $100. So the first one is 10, right? So now we have 90. So it's 90 out of it's the whole is 100%. So the first 10% would be $100. So we put that away, right? So let's put $100 here. Sorry for my writing, right? The next aspect how I look at money is that, see that I put that first 10% away. Now I split up that 90 in three. This three, I consider that three as something known as SIS, right? So let me put that here. SIS. Can I make this bigger? Yes, I possibly can. SIS, let's just remember that. What that actually means to me is save, invest, spend, right? So if you guys taking notes, make sure you remember that. Save, invest, spend. The money that I'm saving is the money for, a rainy day or just money to have cushion. I'm 23 years old. This is the time when I'm more aggressive. I don't need to have that much tuition. I don't need to have that much cushion. So you have to know as an individual where you are in life, what you're looking for, right? You have to know your different financial goals. From the ages of 20 to 30, this is the time when you're supposed to be attacking. You're playing 100% attack. Risk on. You're very risky, right? So we're not necessarily looking to save 70% of our income because we're not in or advanced into retirement. We're young. This is the time that we should be adventurous. So what we do, we divide this 90 in three. So we're saving 30%. So in that case, so the 30 would go here. Where is my jar? Right? So that would be $300 right across the board. Invest another $300 and then spend another $300. And one thing I normally tell the students at Strictly Charts FX is that make your spending be some form of investment. Even though we have a column for it, make it be some form of investment. One, the first thing we look at, we want to pay ourselves first. So we're going to ensure that we pay ourselves all the time. 30, 30, 30. That's the spending, right? So that 30% is anything you want to do. If you want to go jump out of a plane and it costs $30, do it, because that's providing you with an experience that you could become more abundant. You're opening up your mindset to different things, right? If it's a case where you're paying for some adventure, something to make you richer, taking out your family, whatever, that's what you look at, that 30%. And this is an example that we talk about in Forex. The first time you make a withdrawal, first time you make money from the market, buy something foolish. Just buy anything. It doesn't matter, because guess what? Now you're going to see this item. So say, for example, you make your first $1,000, buy an iPhone. If you have an old phone, just upgrade to an iPhone. This is what we call how we utilize the Forex market to be beneficial to us, right? So if that $30, that 30% could cover the fact of you doing something that you always did want to do, buy a laptop, buy a tablet, do it. Don't care about it, because that you have two other columns that we're focusing on. So now we talk about invest. Now, with investment, a lot of people always ask me, what's the best investment we could make right now? For me, my best investment may not be the same for you, because for me, I only invest in things that I know about, the things that I like, right? So if it's a case where somebody come to me with a business venture of, let's say, cycling or whatever, I'm not necessarily interested in cycling, so I'm not going to put my money there. I'm going to look to invest in my Forex account. I'm going to maybe look to see if there's any cryptocurrency that I see that's relatively undervalued. I could say, hey, let me put it here. Instead of me putting it in a bank account where I'm not getting any interest on it or anything, I rather be more risky with my money. So I say, okay, let me invest it in something that I'm interested in, something that I like. Is either I put it in my trading account, some form of cryptocurrency, or whatever, what that I like, right? So, and then the next one is saved. So save, invest, spend, right? So that's how we have it. And once we could understand this, this is one of the main tools that we utilize to be financially smart, for be, logical with our finances, right? And how we get to the value or to the amount of money that could make us function from a premise where we could be abundant. Once we have this blueprint, we want to ensure that, okay, the next thing we want to do is study our expenditure for 3 months. So if you guys leave here today and don't do anything, I want you to track your spending for the next 3 months. So now is what? October, November, December. October basically finished. So November, December, January. These are some important months still, right? So you're going to track your expenditure for the next 3 months. So now when you do that, you're going to see how much you spend on a regular basis. Once you do that, you could divide it by 3 to see how much you spend on a monthly basis, right? Once you get that number, that is your monthly expenditure. That is your monthly expenditure, right? So you are going to know your monthly expenditure. So you could start, utilizing this aspect of the 10, 30, 30, 30. And then the next thing I would love for you guys to do is multiply that by 3, because we don't want to be safe or on the borderline. We want to multiply that by 3 to know that, hey, we're abundant, right? We have 3 extra lives. If it's a case where, example, COVID-19, work for the next 3 months, have no form of income, you have 3 months sit down, not even sit down, but you just have 3 months secured, right? If it's a case where you want to trade, you maybe can trade with half of it. If you're a professional trader, I wouldn't advise you to go trade with half of your 3 month budget, but you can take out some and go trade with it and so forth. But what I'm getting to, I want you to find out how much money you spend monthly, multiply that by 3, and then anything you're looking at, any form of way how you're going to spend your money, remember this 10, 30, 30, 30. So that is the first aspect of something known as our money management, how we generate money from the foreign exchange market and how we distribute it. Again, money is a commodity, money is a tool. You have to know how you utilize that money, right? Is that clear so far? All right, good. So the next thing we need to know is if it's a case where you can't find a way how to multiply that money by 3, that's what the foreign exchange market is about, right? Individuals nowadays need to be open to different forms of making money. We have been preaching this I've been preaching this from 2018, 2019. I started my journey from 2017, realized what the foreign exchange market provides. And I'm like, okay, then I'm not necessarily seeing myself working for money. I believe that money should work for me. So this is something that I spread amongst my peers to say, hey, you must find a way how you could make your money work for you. Trading the foreign exchange market, to me, is one of the best opportunities. And I could say that without any remorse or any regret. One, it's the largest financial market. 2020 came, guess what? COVID-19 was the catalyst, was the nail in the coffin to say, okay, you believe in working a 9 to 5, you believe in going out there and so forth, working for a boss and so, guess what? Yesterday I was watching the TV. 270,000 people has lost their job since March 19. And guess what? I always hear this thing. I can't wait till COVID go away or this and that. But Jamar, what we know, this is not going away. This is the new normal. This is something that they've had to portray, been had to lay out, right? Elon Musk said it once that a few years from now, robots will be one of the main employees in most of these industries. So a vast majority of these degrees that you is providing, a vast majority of degrees that these universities are providing will become obsolete. Just remember I said that today. A vast majority of these degrees will become obsolete. So I have to give hats off to somebody known as Christopher Nunes. He's now creating a new platform for individuals to create their own degree, which is wonderful, right? And if that's the process that you like to take, sure. However, you have to be open to change. It's 2020, everything is improving. You have to find new ways of how you could generate income. We're now in an e-commerce economy, time in history where the internet is very underrated because people still believe that Forex is a scam. Like, oh, this is something that been about decades ago, right? But I'm not going to get any more into that. But what I'm saying that you guys need to be more open to finding other ways of making money, right? So new ways of making income, one of the main aspects is Forex, one of the best aspects to me. So is, what is the nature of the foreign exchange market for the ones who know nothing about Forex? All right, so let me switch to a different screen. Hold on. I hope you guys are following so far. So you guys are seeing my screen?
Yes, we are.
Perfect. So nature of the Forex market. I'm going to run through this real quick to give you a brief insight of what Forex entails, who controls the market, and how we at Strictly Charts FX look at the market from a general perspective, right? So the Forex market is 90% technical and 10% fundamental. When we talk about technical, if you guys are familiar with any of these charts that you've been seeing on Instagram, that you've been seeing on YouTube, that you've been seeing all over the place, that is the aspect that we're talking about, technical analysis. What we're basically doing, we're studying historical data, right? So those things that you see on the chart are the psychology of the market, what people believe as a price that is relatively expensive versus a price that is relatively cheap in comparison to the two economy. When I say that, I mean, I'm talking about the currency pair. The currencies are quoted in pairs. When you watch the news, USD JMD, today it's 140, tomorrow it's 145, next year 160, whatever, that's analogy I'm talking about. But what it is, it's basically comparing the two economies, right? So if the US economy is outperforming the Jamaican economy, the US dollar will appreciate, meaning go up in comparison to the Jamaican dollar, right? What we're doing, we're studying the price data on a chart. And that is the skill set that we provide at Strictly Charts FX, because what we realize is that history tends to repeat itself, but not exactly. But once we could identify these patterns on a continuous basis, study the characteristics of specific currency pairs, this is how we gradually create an edge and execute on that edge. And that is how we make a profit, right? Not every day we're going to make a profit. Someday we're going to make a loss, but our skill set and our mindset and our techniques that we use at Strictly Charts FX allows us to be consistently profitable over the long term, right? Because the perspective that a lot of people have on the market is like, oh, Forex, I'm going to start Forex tomorrow and become a millionaire. But to be honest, if that was the case, everybody trading Forex would be a millionaire, right? So stating again, the Forex market is 90% technical and 10% fundamental. So the individuals who maybe do some form of statistics, economic, or I would say physics, even physics, who have a relation with some charting and so forth, it will be easier for you to grasp certain things. I'm not saying it's hard because it's very straightforward. Forex is not easy, but it's simple. And it's just the way how we are educated, the way how we are taught to overthink certain things, why Forex is relatively hard for some people, right? But anybody could grasp the concepts, anybody could grasp the charting. All you have to do is be willing to put in the time. We have done the work already, and it all depends on if you're willing to do the work. The next aspect is that the other part, the other 10% is fundamental. The fundamental aspect now talks about the economical reports, the fiscal reports, the unemployment rate, um, the labor force, like how much people gain new jobs and so forth. That's the fundamental aspect of Forex. And we look at it as a 10% weighting because price action, what we're seeing on the charts, the data is what really tells what we could speculate, what we could predict, or what we could execute on. The fundamental aspect where they tell you about, 200,000 people lost jobs and so forth, it affects the market, but not necessarily so much. It was one, the data that is produced, when you see some people come on the news and say, 200,000 people lost their jobs today, that report could have been done in September. So that news or that data could be already priced in the price, right? Could already be the data feed could have already done read that done gone through the market already. But individuals who trade fundamentally look at it and try to trade from it. But in reality, the market is 90% technical and 10% fundamental, right? And I hope that is clear for everybody thus far. The next aspect is that the market is not random. What I mean by that is the people with the money control the market. That's how the earth run. That's why you realize some people start a new venture and majority of venture that they start, it works. Why? Because they have the money for it to work. And that's exactly how the Forex market works. Banks and major institutions control the market because they have the most money. If it's a case where the US dollar is let's say overvalued or high in comparison, what I mean by that is, say for example, the US dollar is high and when the USD JMD was at 150, there's things that the bank, the Central Bank of Jamaica will do to try and, reduce that, meaning they will pump more US dollar in the economy to try and bring back down that value, right? But what I'm stating is that the Forex market is not random. The people with the money control the market. So what we do at Strictly Chart FX is realize that and try to trade alongside them because we want to be flowing in the direction of where the money is flowing. So we're trading with the banks, with the major institutions like JP Morgan, Barclays, Douche Bank. I'm not sure if any of you guys ever heard about anything like that, but these are the banks and the major institutions who control the market. And as it said, underneath it all, peel away the retail. Retail are people who trade from home, trade on their cell phone, trade relatively small accounts, less than, would say, maybe 10 million US dollars. And those are the maybe like 1 to 2% of the market, 2 to 3%. I never did the recheck of the exact percentage, but it's around that value, right? So the market is controlled by banks, large hedge funds. Hedge funds are basically pool capital. A good example of this on a Jamaican basis is like a partner. So you maybe join a partner with your friends them or your hall, well, you guys are commuting students. You maybe join a partner with some family members and you maybe throw a certain amount of money and then you have somebody who keep the money. A hedge fund is just like that in a more corporate aspect. You have people who give hedge funds their money and they have a hedge fund manager who decide on the investment that they make and they have a specific percentage. Some people call it 2 to 20. So it's like how they split up the money with their different investors, right? And insurance companies. Insurance companies are another major participant in the foreign exchange market, right? So Bridgewater Associates, one of the largest hedge funds, have about $150 billion under management. So those are the type of money that we're talking about. So this is possible because they have the equity to do so. As I stated before, they have the money to do so. Equity is the current value of your trading account. So retail traders often refers to as individuals, traders selling securities for personal accounts. And what the action that they do is known as speculation, act of buying and selling foreign exchange under different circumstances, right? And for us to be consistently profitable, in order to be successful traders, you need to understand trading starts with having an edge. An edge. A cricketer has an edge. Everybody that functions from a specific level of a skill set, they have an edge. An edge are things like their specialty, things that when they see that happen, like a cricketer, them see the ball bounce close to them and they step up and slap it and then get a six, that's an edge for them because that is something that they have seen over time. They have done it a numerous amount of time. They have practiced it. It just comes natural to them. So trading the foreign exchange market, you have to develop an edge. Everybody has a different trading style, but the main aspect that individuals should approach the market as a newbie is find somebody with a methodology that works and basically copy that methodology and then edit it or tweak it to fit your personality, right? So that's how you develop a trading edge. As an example of a trading edge is maybe the currency pairs that you trade, right? So you start trading 3 years ago, example, and you have been looking at two currency pair over the past 3 years, and then 2020 you start, somebody new come on and look on 10 different currency pair. You have an edge over that person because you have been studying two specific currency pair and been focusing on that currency pair in comparison to somebody who will try, be a jack of all trades. No pun intended, right? So successful trading starts with having an edge. And as I was stating earlier, with the fundamental aspect being 10% of the market, we consider it as a distraction, and majority of sometimes it could be used as a catalyst. So say, for example, the technical outlook is presenting the market to appreciate, and the market being, settled, what we call consolidation, not really appreciating or depreciating. Sometimes the fundamental aspect, announcement, 270,000 people lost their jobs in Jamaica over the last month. That news, when it released, it was used as a catalyst for the US dollar to appreciate in comparison with the Jamaican dollar. And all of these things are shown on the charts. It's just that we have to understand what's going on, have an edge, and how we could capitalize on it, right? So characteristics of the Forex market, a quick rundown again. The market is not random, and major players manipulate price. Always remember that. The next aspect is that 90% of traders lose and 10% of traders win. What does that mean? That means, I should not trade because 90% of traders lose? No. This was one of the main reasons that motivated me to become a Forex trader, because I know that once I put in the work and pay my due diligence, pay my tuition, I could become a part of the 10%, because they are human beings who are a part of the 10%. But guess what? This shouldn't demotivate you. This should show you that, hey, there are people who are making money, so you could also make money. And how do you think you can become a part of the 10%? I want one person to give me a correct answer. What's one thing you think you can do to become a part of the 10% of Forex traders that are profitable? Anybody? How is the YouTube chat going on, Jamal?
Okay, somebody says, Zaria Rodney says to practice.
To practice? Well, what if you don't know what to practice? First, you have to know exactly what to practice. But if I should give you a better answer, one of the easiest way to be a part of the 10%, I would say, Jamar, is what? To become a part of Strictly Charts FX. That's one of the easiest ways, right? And that was a brief introduction to the nature of the Forex market. And next thing I want to get into is the platforms, what we provide, and how we could help you to become a part of that 10%. So before I even get into that, one of the main reasons why I am even, elated or even presenting like this, COVID-19 was a catalyst for me personally to even become a better trader. During COVID-19, where so much people lose jobs, business shut down, this was one of the time I made the most money, right? And I remember one of the specific days, I think it was March 19th. Well, I have one here that, it's paused. Hold on. Let me go back to new share. Where are we? All right, so I'm pulling up when COVID-19 started. I have some of my documentation and so forth. This was Valentine's Day, right? This was a day where I was floating 1,400 US dollars. This was on February 14th. This is prior to the whole idea of, COVID-19 and so forth, right? This is some more quantitative analysis of my trading account. This was March 19th. So my trading period when I started trading like full on was from the starting of February, the early part of February. And this is one of my equity curve, right? So this is how my account grew. So let's use February 1st, and this is saying March 19th. So that's February, March, that's 1 month and 20 days. My account grew by 150%. So let's use an example. If I invested $1,000 in my trading account just for it, analogy's sake, my account grew 150%. So that simply means that I am now at $2,500. That's just for example's sake. And if I am correct, let's see if I even have the screenshot of that. Oops. Yes, I'm very diligent with my trading, and I believe that's one of the main reasons why I'm consistent right now. So as you can see, February 3rd, that's when I started trading, deposited $6,223. Yes, this is US. And March 19th, this is where the peak was. That's when I was at my highest equity. So I started with 6,223 and my account went up to $11,160. So there's no more proof needed for the fact that this is very much profitable. And this is just a drop in the bucket. I'm not necessarily like elated by this result because the peer group that I have and the individuals who I trade with, they're the ones that continuously motivate me to a higher level. But this is definitely for a college student, like this is good. If it's a case where you could even make $100 a day, like it adds up. But not every day you're going to make $100. We're looking to be consistent over time, right? And just some fact of withdrawal. This is a screenshot that I have where I made a withdrawal of 1,300 US dollars. That maybe like Jamar, how long on an average from a frugal study would it take for you to make $1,300 in an average workplace?
Yeah.
Quite some time,
Yeah.
right?
I mean,
Yeah, so this is around maybe 180,000 JMD. And that's just from me sitting around a computer and trading. And don't get me wrong, I'm not going to paint a facade that you can just sit down and trade and make this. This is years of losing, years of trial and error. But once you continuously be at it and you're serious about it, you're going to get there, especially when you have a group of like-minded individuals who could assist you. You could learn from somebody who have already made the mistakes and just tweak it to your personality. When I started trading, I never had these privileges. I maybe have some YouTube channels that I could maybe watch and so forth, but I couldn't spend 2,500 US to do a Forex course. So I had to find ways of how to you know, pay my tuition. So I had to pay my tuition, and now the market is paying me back. And guess what? This is a skill that I will have for the rest of my life. All I need is internet connection, a computer. It can be a laptop, a desktop, or an iPhone, right? You don't need much. And the good thing about Forex is that they have lower barriers to entry. I'm not going to compare it to any other specific market because we have the stock market here with us today. But the Forex market is very accessible to even college students. You have some brokers who you could start off with 25 US dollars. You have some brokers who maybe say 200 US dollars, right? Good thing about it also, the Forex market is open 24 hours, 5 days. Well, Monday, so the market opens on Sunday, 4 or 5 p.m. All depends on Eastern, daylight saving and so forth. And 24 hours Monday, 24 hours Tuesday, 24 hours Wednesday, 24 hours Thursday, and then it closed by 5 or 4 p.m. on Friday. Right? And instead of you focusing on maybe 10 different or 20 different, business sectors, you could focus on one currency pair that you could utilize to make money for the rest of your life. So I wouldn't say from a more, I would say, but the facts are there. The Forex market is the best market out there. All right. All right. Let's see if I had anything else to state. All right. What time is it? 3:51. I'll be brief going forward. Okay. Let me new share. All right. Hold on. Oh, yeah. So these are just some continuous withdrawals to show the proof that Forex is not a scam. Forex is real. You have people who have been doing this from 1970s, but difference of it now is that the advent of the internet, the advent of the internet has fueled online Forex brokers, which now allows individuals from anywhere who have Wi-Fi who could connect to the internet to create a brokerage account, get a trading account, send money from their bank account to their trading account, have open access to the market, enter a trade, profit or loss. If it's a case where it's profit and they make money, withdraw that money from their trading account, put it back in their bank account. What a time to be alive. COVID-19, right now, is the best time to be alive. I mean, some people may not see it as that, but the proof is there, right?
Okay,
All right.
Jackie.
Yep, so I'm finishing up in the next 3 minutes. So for the individuals who want to find out more information, you could definitely visit our website. We have a variety of services that could assist you. And in your free time, what time is it? Am I running out of time, Shana?
Yes, we are running out of time.
How much more time can I get?
I'll give you 2 more minutes.
All right, wonderful. So this is our website, right? Learn how we generate, so forth. We have a variety of services. This is what we provide. What will you learn? You'll learn about our technical analysis. The market is 90% technical, risk management course, the psychological aspect. Going back to the first thing that I said, before you even could generate a certain amount of money, you have to have the mindset. So that's where the trading psychology comes to play. We have testimonials from members. You can get a sneak peek of our different courses. And this is our blueprint. This is the course for individuals who wants to learn how to fish, right? And you would see exactly all of what we provide. As I stated earlier, we have a variety of services. If it's a case where you don't have the time, school too pressuring right now, and you want to basically copy our trades, you want to be a part of our trading floor, individuals who just want to say, okay, Forex Professor and the members of Strictly Charts FX are taking a specific trade, you could join our trading floor, right? That's initial investment of $100 per month. And what I'm going to say today, for everybody on this meeting, everybody on the stream, I'm going to be very kind today, Jamar. I'm going to provide you guys with the last thing, Strictly Charts FX rewards card. Let me show you guys that real quick. This is the last thing I'm showing you guys right away. Our rewards card. Where are we? Right, so are you guys seeing the rewards card? This is the Strictly Charts FX rewards card. And for today, 50 members. Once you go to the website and you're interested in joining our trading floor to trade alongside us, you don't necessarily have the time to learn the skill set fully, but starting off here, we're giving you a rewards card. All you have to do when you go on the trading floor and you're registering for that service, you enter our discount code. Our discount code is SCFX forever. So I'm going to write that down. SCFX forever. And once you put in that, you get 50% off. So it would be just from now until November 1st. For the 51st members who are definitely interested to start their journey on the best possible approach. Thank you, guys. Any questions?
Thank you so much, Jakeem. For those who have questions, can you please type them in the comments below? I have a question from YouTube. Let me see if I can scroll up to find them.
All right, so here's the aspect of enter your discount code. So you just click that and it's SCFX forever. Once you apply that, being generous today until November 1st, our membership would be 50% off. So let's make some money.
Okay, Jakeem. So the first question I have is, what are some of the attitudes, perspectives, and actions that depict a poor mindset, and how does one go about changing that?
I can't do that. Forex is not for me. I don't know. Those are some of the main aspects of, you would say, a poor mindset. When you say, I can't, like a statement reinforces your belief. When you ask a question, how can I become a profitable Forex trader? If you understand how your mind works, this opens up like perspectives for you to start, seeing how you could work your way to it. So I have a running mate who he inspires me a lot. Like the first thing he does, anything you want to achieve, how can I do that? If you're talking about figures, how can I make 10,000 US dollars a month? Automatically, your brain should start fueling ways how you are going to achieve this goal. Not necessarily going to get it tomorrow, but once you start, when you say how, it start firing different chemicals to your brain to get new ideas. And then the next thing you have to do is execute on those ideas. And what you have to remember is that inspiration is temporary. I did that in a video. Inspiration is temporary. So you have to know how to act on those inspirations. So the first thing you have to do is ask better questions. So take out the word I can't. I can't trade Forex because I don't like numbers. No. How can I become a consistent profitable trader? How could I get straight A's? How? Switch it to that. I can't get straight A's because RVLE always a crash when we're ready for the exam. Or don't say that.
Yeah.
Did
We
that
have,
answer your question?
I think that answers the question over YouTube.
All right.
Another question was, is this discount for the lifetime of my membership or just for a period?
Well, for the trading floor, we have the discount for you guys, especially up until November 1st.
Okay.
Yeah, so
And
let me type
I
it
have
through.
a personal question.
All right.
My brother does Forex trading. I would like to ask what tips would you recommend for students who are currently enrolled in school and balancing school with Forex trading?
I would say create a schedule. Create a create a schedule of everything you do. You have school, you set out time where for yourself, and you set out time for when you're going to invest that time into. If you truly want it, you're gonna find the time. I always hear people be like, "Oh, I don't have the time to trade Forex." That's crap. If you truly want something, you're going to find the time. All of us have 24 hours, right? Even if it's an hour a day for 365 days equal to 365 hours. That's a lot of invested time in anything you're doing.
Okay, Jackie. Yeah, they over YouTube said you answered their questions. I think that's it. I want to thank you so much for coming out and talking to the commuters about Forex trading. I learned a lot, stuff that I didn't know, and I hope it will motivate you guys who are currently thinking about ways of increasing your income or earning an income to look at the Forex trading market. And now it's 4 o'clock, so I will ask Justin from 876 Invest to start talking about stock trading. Justin? Justin, you might mute.
Oh, my bad, my bad, my bad. Can everybody hear me?
Yes, we can hear you.
Okay, perfect. Right. I just want to give a big shout out to Mr. Jackie Wilson over there. You know what I mean? Great oversight. And this is also my colleague David Nunes, also from 876 Invest. And we are essentially the co-founders. Oh, but you probably won't notice because you actually have the two same names there for the for the titles, but that's fine.
He can rename himself actually.
Okay.
My name is David Nunes. Let me rename myself. I'm sorry.
Right. But essentially, we are the founders of 876 Invest, a team of young entrepreneurs who have been regularly trading stocks, whether it be on the Jamaican markets, the NYSC, and we dabble into other financial securities as well. But, right. So essentially, we just like to bring to you our interpretation on investing and financial wellness. Okay. Great, great, great. Okay, cool. Well, named up on everything. Nice. All right, so let me just go ahead. Can I share my screen? Cool. Okay, seeing everything?
It's loading. Okay, yes, we can see.
Okay, perfect. So once again, guys, 876 Invest. You can find us on Instagram at 876 Invest, 876 Invest 1 on Twitter, or at 876invest.com, right? So without any further ado, so well, first question is, what are stocks, right? So I don't know how many of you guys are actually familiar with stocks, or you might have probably heard a thing or two about Wigton, Transjam, or Wisync or NCB, anything like that. But essentially, stocks are just shares, little pieces of a company that are of a publicly listed company that we are able to invest in. We go to our brokers, we say, hey, listen, I want to open an equity account and I would like to start buying into one of these companies because I feel they have some strong prospects and I would like to make some financial gains from them, right? So these are just pieces of companies that are sold over the exchanges, whether it's the main market or the junior market, depending on the size of the company. And it's just another way to invest, just another way to invest in money and to try and get some gains off of it, right? Because once the company continues to grow, your money will continue to grow. Okay. Next, getting started. So these are just a few things that you're going to need to know once you're on your way to becoming an investor, right? You're going to need to know what are the hours that people can be trading on the markets during the weeks. You're going to need to know what is it that you're going to be needed to actually start investing in terms of the requirements and the documentation. You're going to need to know what companies are there, right? Because you've probably heard of a couple of companies, one or two, but you probably want to take a deeper look into all the companies that are there listed, right? I look into everything on the market. So all the companies with a main, junior market, financial sector, distribution, fast moving consumer goods, things like that. And based on the direction for growth, based on how interesting I find it, based on what plans I see that are going forward, or based on what I think will surprise the market in a matter of time. These are the sort of things that I'll be looking for, right? And then that determines my investment style. And from my investment style, I set my goals, so I know what I'm looking for out of each stock. I know what I'm looking for in terms of the returns. I know what I'm looking for in terms of how much money I want to allocate to it, but we'll get to that a little bit further. Okay. So I mentioned brokers earlier. You need to know who exactly you want to start investing with. So on the left-hand side, you're going to be seeing all the brokers in entirety where you can actually invest through stocks. But if you want to be a retail investor, you want to invest for yourself, you want to have the complete control over which stocks and companies you're buying, over the times when you choose to buy or sell without any need to contact an advisor. You don't want to be waiting on them. You want to ensure that you see this price, you see that it's going up right now, you want to get it out on your own, then you have the power in the palm of your hands, right? So these brokers on the right will allow that for you, whether it be Barita, NCB Cap Markets, Proven Wealth, Sagicor Investments, VM Wealth, these companies. Next. Okay. So there are a couple ways you can actually earn from stocks, right? Whether you want to be doing it on your own, as I said a while ago, or if you're not that type of person, you don't feel like I said, it's not for everybody. The type of trading that's, for example, David and I would be doing, where we're really aggressive, we're high risk, we looking at the market every day. I know that's not for everybody. So there are the options to invest in with a unit trust, or have the broker or have the financial advisor manage the stocks for you directly, right? So you have the options to say invest with a unit trust. So
And a little explanation on what a unit trust is. It's basically a pool fund scheme. So what happens is that, let's say on the Jamaica Stock Exchange, let's say there are only 10 companies. In a unit trust, we have, well, some of them can differ. They can be split up into sectors. So let's say we have a unit trust here. This unit trust will invest in all 10 of the stocks on the exchange. These unit trusts are different ways of investing in order to mitigate different risk factors. Also, for people who, as Justin said, want to have a more hands-off approach and more take on the market on a larger scale. So a pool of stocks, that's what unit trust basically is. And when you look on your screen, you see something that says capital growth. That speaks to Barita's Capital Growth Fund, and it consists of most of the stocks on the stock exchange. And basically, they have different allotments. Most of these unit trusts, they are market weighted, meaning that the stocks that have the highest market capitalization, hence the stocks that are the biggest stocks on the market, like NCB, Jamaica, we know that that's the biggest listed company in Jamaica. So usually when we have unit trust, these companies tend to be the highest, have the highest shares allotted because it is market weighted, as I said. So apart from unit trust funds, now we see money market. So basically money market deals with treasury, 30-day auctions. It's just really cash flow. It's really liquid. So unlike a unit trust that if you invest money now, you may have to wait 3 months, 90 days, 3 months, to redeem your subscription because money needs to be allotted. And as we always should know, stocks are a long-term tool. It's not necessarily for short-term trading. So capital growth, long-term, money markets, very short terms, government paper, T-bills, 30-day auctions. So that's easy liquidity. That's for the risk-averse investors. So income portfolio, similar to the money market fund. T-bills, 30-day auctions, and basically subscription prices are low, very liquid. FX bond portfolios. Justin can explain more to you about real estate portfolio. So the FX bond portfolio, basically bonds, they're also securities similar to stocks, where company A takes your money for a specific period and decides when to pay you out. But in this investment scheme of the bond portfolio, it consists of multiple bonds. Some will be of blue chip nature, some bonds corporate, and what you'd say retail, Justin. So right there, this consists of safe assets because bonds are usually considered safe depending on its ratings. Because if you read on bonds, you usually can find either local brokerage houses rating them or they have an international rating by firms such as Fitch. So the real estate portfolio, Justin, you want to elaborate on that?
okay.
All right. Seems Justin is having some technical.
Microphone muted.
My bad, I double clicked the mute button a while ago. So essentially So essentially the real estate portfolio now is basically, as Nunez would have said a while ago, it's a pool fund based on the investments that Barita would have had into all the real estate properties they have, whether it's commercial real estate, residential, whether it's whatever form of investment they would have taken into the real estate portfolio, you are basically gaining a share of that based on how the value of the asset would have appreciated over time. So naturally, as you know, with real estate, it's a bit more of a longer term investment, whether or not it's a unit trust or whether you're just investing into real estate itself.
So it's interesting to note, Justin, that with this portfolio, people will be able to actually own real estate without owning it physical copy of real estate.
Exactly. And then you even have the price listed right there. It's about a single unit would be about just underneath $5,600 to have a single unit in investment into that. And then you see the growth actually just to the side of it. So over the last 12 months, it has grown just below 20% over the last 12 months. And that would mean whatever value you would have put into it. So whether you want to be $10,000, $15,000, $20,000, 12 months ago, you would have been up 20% up to now. And in comparison with a couple of the other unit trust options, it's actually one of the better performing ones. Look at that.
It's a strange dynamic because approximately just a year ago, you could say that the equities market was leading the charge, but here comes Corona, and it has flipped the circle around. The usually steady investments have been outperforming the stock market so far. So real estate, which is usually a slow moving investment, what we see is a dynamic shift here in the markets where people are sort of tapering down their holdings in stocks and focusing on the real estate market.
It's not a matter of uncertainty.
We see a high growth in the real estate sector there, in the real estate portfolio, and also in the US dollar growth portfolio. That's the next one coming up. Because as you know, even year to date here, we've seen the US dollar slide more than 5%. So just looking on those factors, we can see why these portfolios now remain the sturdy portfolios. And when you look on the capital growth, which consists of mainly stocks, we can see that it's down 12% of the 12-month growth rate. And year to date, it's even down further, 16.5%. So we can see that stocks are sort of not really living up to the Jamaican hype of being the best performing exchange just in 2019.
Right.
However, I mean, as we usually see at 876, stocks only go up. These corrections usually create a new environment for an even bigger rebound, you know? So it would be good to watch out for some of these companies, how they navigate the new period, and hopefully these portfolios will boom by early next year.
So, because the funniest thing is the Barry unit trust for the last 2 years in a row was the number one unit trust. I believe it gave about returns of about over 30, over 40% in 2019.
It was given 40, it was 44% year to date for the Barita capital growth just so last year.
2019, you would have invested say $1,000 and you would have been up about call it 1,400.
Yeah.
1,400, 14,005, just about so.
1440. So we can look here talking about Barita. We have another thing here that says stock returns. If you look on Barita stock returns, looking on the date, year to date, we see that the stock price was sort of down. However, in the past month, we saw a spike going up to 92.
Massive spike.
A massive spike. And this came as a result of an APO. And we're going to get into that much later. So basically, the market got excited from this APO. I won't tell you what is an APO right now because we'll get to that slide soon. However, these sort of stuff show that the market can get excited due to certain extraordinary events. Right. So we'll get more into what is an APO and what could have possibly caused this jump in price that you can see on the chart here. It was basically lingering under $60. And there was just a huge jump up to 90. So we'll talk about that APO effect in the coming slides.
Okay. So, all right. So how to invest? So once you would have gotten started, you applied for a broker, made the deposits, you funded in, and you made yourself a bit more acquainted with the markets. You're going to now start looking towards where you want to invest the money, right? That's if you want to be an individual investor. So up here, you can actually see a listing of all the different indices, which is basically just a basket of the different stocks and how they've been performing year to date. So you have the main index, combined index, the cross-listed, or even the US dominated index, because as you know, we have Jamaican companies, we have local companies with a US dollar stock base. But moving forward, you have the main market, the junior market, USD market, even have the bond market where you can invest into as well. And then right here, this screenshot in particular is just the main market and the particular stocks down there. So just anyways can explain it a bit further.
Yeah, man. This basic screen shows how our platform that we trade on looks, the JTrader platform. So as Justin was talking about the main index. So the main index basically contains the largest companies on the exchange. Companies with a market cap of over 500 million. So your NCB, your Seprod, your Sagicor Group, these giants are all contained in the main index. They're the heavyweights of the Jamaica Stock Exchange. They are the largest companies. They have the biggest market cap, as I was saying. So we'll move on to the junior market. The junior market, as it sounds, is usually the smaller cap companies, your MSMEs, your small businesses, your medium small business or small businesses. So in this index, you can find companies that are usually under a $500 million market cap. So your Derrimon Trading, your Lasco,
Your Mailpack.
Financial, Lasco Manufacturing, your Mailpack, as Justin said, all these new exciting companies. Even more recently, your Tropical Battery.
Right.
So this market just contains really the small caps. However, this market still has managed to deliver high returns, even compared to its
To the main market
large decline in the main market because they're smaller cap. Usually these prices can run up quickly in a matter of no time, especially if these companies are making good strides forward. For example, stock splits and APOs, as I say, I'll get on to later.
Or even market sentiment in general, because the number one performing stock for 2019 in total was Fontana. Fontana listed on the junior market early 2019 at an IPO price of about $1.80 or in that region. And it traded as high as $9 in mid 2019. So imagine that's over 4 times the money you would have invested easily.
Yeah, that's high belief in the growth of the company right there. And all that stems from usually when you look on a company, who is the CEO, who is the board, what are their plans, and investors will buy into this. You know, after the build out of that the flagship location in along Waterloo Road,
Right.
people are saying, wow, from this small of some people just know Fontana as a pharmacy, you know. After seeing this large development and all of these commercial giants who are flocking to the space, your Wendy's, your Starbucks, all of that. These are blue chip companies which further almost ensures that even during a pandemic like this, a company like Fontana will be definitely getting their rental money or the lease contracts that, you know, won't say dipping anytime soon because these companies have good balance sheets and they have the ability to pay. So good moves by Fontana.
Right. So now moving on to special market events, because these are the kind of things where investors really get excited about and won't have any issue raising capital, won't have any issue pushing the stock price if it's done correctly and if it's seen as attractive to the investors. Now, when we say attractive, what do you mean? So, say for instance, IPOs. There are IPOs which do extremely well, right? They will all double in price from the offering at which they came to market for in a matter of days or even a matter of a day, which you've seen a couple times as well. So this is all dependent on one, the financials, two, the market sentiment, three, the purpose of them raising money, right? Because it's not only small companies IPO, mind you. Sometimes companies just want an exit, right? Sometimes they just want to raise the money to have further use for it, whether it be to open a new location, to pay back their actual owners of the company, whether it be for other benefits such as the tax breaks. Because one of the things you need to know is that when companies list, they have a little incentive to do so, right? Because when they benefit, we benefit.
That's on
So,
the junior stock exchange.
right. So
They
if,
get that
for instance,
tax
a
benefit.
company is going to list on the junior stock exchange, they get a 10-year tax break. You get 5 years tax free and another 5 years, 50% off on taxes.
Which works out in the benefit of that company, definitely, because as I said about the junior stock exchange mainly contains your small businesses, your medium and small businesses. So when we look on these companies, they're not the mega cap companies. So this tax break significantly allows these companies breathing room and also allows them to be able to, what the stock exchange usually wants to happen is to graduate these companies from the market cap of 500 million to be graduated onto the main index. So Justin, just tracking back because we didn't put a definition as to what an IPO was. We were just talking about it. So IPO, initial public offering. So Justin said earlier about he was explaining the definition on what is a stock. He was saying about a public listed companies, but private companies also own stock, correct? And
Right.
when it's only when these companies become public that the general, me and you, have the ability to purchase stocks in these companies. Because some of these privately held companies, usually only directors and affiliates of the company usually become privy to owning a piece of it. But once it becomes public and is listed on an exchange, anybody can get a piece of that stock. So, so the IPO, this initial public offering is usually brought by a broker, where it is underwritten by a broker. And we spoke about these brokers earlier, your Barita, your Sagicor, your Proven Investments. So these brokers usually take on the companies, they work out the arrangement, they underwrite it, they basically, the underwriting process, basically they value the company, see how much each shares are worth, separate the shares into reserve pools, general pools, all of that. Create a document, send out to the shareholders. And this document contains previous financials of the company, condensed previous financials, what the company plans to do moving forward, because the IPO is basically selling the company to its future customers, which is going to buy at this public offering. So anything that the company plans to do to woo investors, if they plan to pay off some debt, and the plans is that within 5 years the company is now going to be able to double its market cap because of some big acquisition, is the company going to now be able to enter into a new sector, a new arena, a new line of business. All of these stuff, when it's brought to the public reviews this IPO application, the prospectus as we call it, and we say, okay, is this company undervalued? Is this company overvalued? Or is it just market weight? So these are all stuff when an IPO comes to the market. And once it's brought and it's bought in by the public, it can be oversubscribed, undersubscribed, or they manage to just break even. The amount of shares is just subscribed. So that's the basis of an IPO. Bringing a company from private listed to a public listed company to now be available for everyone. So we can move on to a stock split. So a stock split, basically, as it sounds, it's really just straightforward. So if I have a company and that company is valued at $10, and I decide that, okay, I now want to lower my share price. $10 seems like a price that's not really that attractive for many investors, your regular investor. And they say, okay, I will now do let's say a 5-to-1 stock split. So for every one share you own, you get 5 additional shares. So 5-to-1. So every one share you own, you get an additional 5. It does not increase the value of the stock you hold. However, it doesn't necessarily cause any reduction in your value. However, the stock prices now comes down to a level that is deemed more attractive for buyers. So the stock splits in half, goes down to $5. The expectation is that investors will now be like, okay, this is now at a cheaper valuation and the stock seems more accessible. So these are stuff that companies do to encourage activity or volumes to the stock. I want to briefly touch on the APO, Justin.
Sure. So similar to an IPO, where this is the so similar to an IPO where the company comes to the public and says, listen, I am coming to you, I'm offering these shares for you to take it up so I can do X with the money, right? An additional public offering is where the company once again comes to the market after the initial phase, right? They come to the market, say, listen, we're trying to sell you these additional shares that weren't previously available, they weren't previously on the market trading. These are brand new shares to be offered to you, the investors, for the
Raising capital
purpose
for a
of receiving
specific
once again, right?
event.
Just like how with an IPO, they've had a prospectus, they've had a reason for why they want to raise the money, they've had a purpose for it. It's the same thing, except that they have already come to the market, right? So once again, they probably come with a bit of a discount on average more often than not
Yes.
to the current market price. And they're going to say, listen, we're offering X amount of shares at Y price. If you're interested, you can buy into it. And this is what we plan to do with the money. Whether they want to buy shares in another company, which would have seen with JMB, whether they want to pay off some debts, whether they want to purchase some acquisitions in terms of land space or other things like that.
Company.
Right.
So basically the additional public offering, all it does is just, let's say company A has 1,000,000 shares at IPO, which we spoke about earlier. When an APO happens, which is after the company is listed, and the company decides, okay, I want to raise some fresh capital. So the company comes to its shareholders and say, okay, I originally had 1,000,000 shares on offer, and now I want to add 500,000 shares more. So this creates a new pool of shares. So now it would be 1.5 million shares available now to the public. So they're making the company shares available much larger. This can, as Justin says, pay off debt. And also what it does also in some companies that are tightly held, it allows new shareholders or existing shareholders to up their stake or equal their stake. Because if I had, let's say, 500 million shares out of that $1 million company, if they add, let's say, 1 million more shares, instead of me owning 50% of this company now, I don't anymore. So I will have to I'll have to buy 500,000 more to be a 50% shareholder again. So as we spoke about encouraging movements in stock, encouraging buying, encouraging volumes, and also raising capital for the company. All of these are certain tools that companies use, publicly listed companies use in order to build capital and raise money to carry out various deeds, as Justin said earlier. So on to the rights issue. So basically, a rights issue, it's similar to an APO. However, the major difference between an APO and a rights issue is that there's not necessarily any new shares being added for outside investors, meaning people who weren't previously shareholders. And I'll speak about it because rights issues can be broken down into two types: renounceable rights issues and non-renounceable rights issues. So shareholder A, I have stock of Barita, and Barita is doing a rights issue. Basically, as a shareholder, I get first preference as to the benefit of saying, do I want to buy additional shares along with what I have already, which doesn't affect, unlike an APO, which causes dilution, as I spoke about with additional shares being added, you will have dilution of, let's say, the million and the 500,000 as I spoke about. You increase the share capital by double and no longer own 50%. Basically, a rights issue is just giving up more shares to existing shareholders. It's renounceable when the shareholder has the opportunity to say, okay, I do not want to participate, I do not want to uptake any more shares in this company. And that way, other shareholders get the benefit of the uptake. So rights issues are usually between shareholders, while additional public offerings offer the public who never had the stock a chance to now gain units in the stock. So they're similar, but the technical difference is that there's not necessarily any additional shares being offered that were not in circulation prior.
All right.
It's
As
not
well as with the rights issue, it's the rights in the rights issue stands for the rights for the previous stockholder, right? So if you would have already owned shares in this company, then the rights issue is for you, right? That's what it means by saying if you're an outside investor, if you're just a regular person in the public, versus if you already have ownership in the company.
Yes. So
Right.
it's your right to purchase once you're a shareholder. And as I was talking about the breakdown, renounceable rights issues and non-renounceable rights issues. The renounceable, as I spoke about, you can say, okay, I don't want to uptake. And that way, if another investor, if they wanted, let's say, 10,000 shares, but they were only applicable for 5, because you've renounced your 5, they're not able to take your 5 and say, okay, yes, I renounce this, and now shareholder B can get basically my share that I have said no.
So David would have passed upon his opportunity because he said, listen, I'm okay with what I have. And then I now get the opportunity to get the shares that would have been allocated to him.
And it's important to note that these rights issues, they're usually done in liquidity crisis. I shouldn't say usually, but it happens sometimes that when there are liquidity crisis, the companies just offer more shares to shareholders at a price and say, okay, we need this to pay off this debt. So here are some shares we're giving you. It's usually coming at a discount, just like the APO, and say, okay, here is shares for some money.
All right. Okay. Just about the gist of it. We can go over it a little bit later if anybody has any questions, if anybody wasn't as clear. But right. So now we're moving into what are we looking for as investors, right? So as investors, we're trying to be very prudent. We're trying to be very cautious with our money because we don't want to end up an investment which goes downwards, right? We don't want anything to lose any value. So what we need to do is we need to acquaint ourselves with the financials. We need to know what this company is doing. We need to know if they're making money. We need to know if they're making profit, right? So we need to know that they have a healthy income statement. We need to know that they're not drowning in debt. So we need to know that they have a healthy balance sheet, right? And then we need to know that they have healthy cash flow. So we check the cash flow statement. These 3 things are the core of any financial statement, and it's very important to you as an investor to understand, to be able to read the financial statements. If you have any history in accounting, you would have had some background to it, and if not, you're like me who had no prior experience accounting any at all, then we have a link for you a little bit later on where you can acquaint yourself. It's a free course where you can basically learn to read financial statements. You can go on YouTube, you can read it in a book somewhere. You just want to be able to know, so listen, this means this, the revenue is here, these are the expenses the company has to go through, but at the end of the day, they're making healthy profits and are doing it consistently year over year or quarter over quarter, right? So next, we look at what are the changes that are occurring within the company. What's going on within them? Like, how are they positioning themselves? Are they messing up? Are they missing on opportunities that should be great for them? I can give you an example. When I just started investing back in 2018, we were just about to dawn on the plastic ban. So you're just going to remember this one. So right before the plastic ban, I said to myself, say, we can't get no more styrofoam box. Can't get no more plastic bag. Who is one of these companies that are going to step up, that are going to find the ones that are going to be our saviors as Jamaican people and start to provide us with some things so we can finally carry out our coffin box out to the cook shop and the curry gravy dough that shit on it, right? So I thought to myself, say, yo, wait, we have a paper packaging company on the exchange, AMG. So I said, yeah, man. And I just went straight into buying. I just went up and said, yeah, man, shell some money on AMG, buy it up. I just sat down and waited. And the day of the plastic ban came, I make sure I get up. I'm looking at the gleaner every day. I'm wait up and say, wait there. I'm not seeing nothing. I'm not seeing an announcement. What's going on here? Only to find out that AMG, that very same company, was too busy covering on some losses from toilet paper. You can imagine that? A couple years before, they must know about the plastic ban coming up and they wanted to go into toilet paper. So you can imagine how I felt, right? Wasn't the best investment, but that was on my part. Why? I was looking
A
into it.
learning experience.
Learning. It's just a learning experience. Sometimes you have to
And
burn to learn.
And that is exactly why it's not just one focus, because even though you may have looked at it and say, okay, plastic ban coming up, we have a company here that already has recyclable material. You only paid attention to the notion that, okay, they should do well because of this recyclable material. I'm not necessarily focusing on their financial sheets, nor looking on what were their plans for growth.
There we go.
It appears that they didn't have that
They didn't have the
in their
plans in
plans
here.
at the
To this
moment.
date, I haven't seen anything substantial.
Yeah.
But
I mean, that's not investment advice, by the way, guys. If you guys like AMG,
right,
go
might
ahead.
be something that I'm not seeing right now, or for that particular situation, right? But I'm just saying it's an example of what I had to go through. So that's also an example of having to question all your first thoughts on a company and say, yes, I know this must be happening. This is what they do for money. This must happen. They must make some money going forward. No.
Yes, those are always novice mistakes. Like you talk to first-time investors, they say, you know, I want to invest some money in an NCB. NCB big, and most can make a money off of them. While that may be true, we still have to remain prudent investors and do our due diligence research and look on these four points that we have here. Look on the financials, look on changes within the company and what it operates in, opportunities for growth and future plans. Because all these, no matter how big a company is, no matter how successful a company has been, past performance does not indicate future growth. So, in order to always be ahead of the curve, we always have to look on companies as okay, what are they doing now and what do they plan to do in the future? Because, I mean, as we said, stocks are not short term instruments, it's always for the long term. Because every time we look back on history, we say, wow, suppose you had NCB even in 2005. As I would go earlier, suppose you had NCB in 2017 or 18. Even if you had NCB at the starting of 2019, let's say you sold at the end of the year, you would have been in profit. But interesting to note, NCB stock price has taken a
I,
bit a hit, a bit of a hit since the corona. And people would say, boy, you know, so and so. But to be honest, NCB has healthy financials. They have a good growth opportunity. They have nice plans, and you know, when you look on how they're digitizing and modernizing um, their their branches, you can say, okay, they're stepping into the future. Also, you look at the Gleaner the other day, which rated them the safest, one of the safest banks in this Western Hemisphere.
and they recently just bought out, I believe it was Guardian. Guardian, right?
Yes, that was early in 2019.
Right.
They bought out Guardian from the Trinidad shareholders.
Guardian Insurance, I should say.
Guardian Insurance, yeah.
Right.
So, I mean, massive steps going forward. So, let's get back on track here. So, as we're talking about growth, solid opportunities for growth, I mean, that's where you do real reading into a company. You look and say, okay, what direction this company is going to? And you look at all of that, as we mentioned earlier. So, on to the
So
the best performing stock for 2020. Not necessarily best performing in terms of numbers, but that's my personal feel about it. It's the healthiest company for 2020.
So what I did was I took the time out and basically put aside some signs which you might have seen if you were really looking into it, right? Because people always ask, how do I know when to buy? Well, if you're really interested, you look into a company, you find that you like it, the financials seem great to you, you start to take note of it, right? You look out for it in the Gleaner, you look out for it in the Observer. You can even use social media perfectly because you can put on post notifications on say Facebook and Twitter to get any updates that might be going on with the company, right? So let's double check on this now. Changes within the company or the universe which it operates in. So for the longest while, sugar hasn't been doing too well for the region really, and especially Separate, because Separate would have been generating a whole lot of losses through their sugar endeavors, which we can look at what. Um,
They were losing approximately $1 billion per year
yeah,
from sugar because
uh,
it was a company that I followed closely in 2019, and I was always the one to be saying, guys, be on the lookout for Separate because once this sugar arm has been cut, it will be massive for them because early in 2019 they made a acquisition which is of the Facey Commodities, which they acquired in early 2019. And Facey Commodities basically is a distribution company. Okay, so they distribute and manufacture certain products.
didn't buy a company to step up in distribution. They
Definitely.
recognized that sugar was costing them $1 billion and started to cut it off of their books. Next, they started to export surge milk to Trinidad and Tobago, right? So they previously weren't in Trinidad any at all, and here they are now exporting with their brand new dairy, right? So you can see this posted to the Jamaica Manufacturers and Exporters Association, and you know the rest is
So
history.
this basically shows us that Separate, they were basically, without them even knowing, they were gearing up for an awesome 2020 because looking on how the FACE commodities boosted their income, their revenue by at least 80% because of their exportation value. So when FACE commodities came into was bought by Separate. Separate wasn't necessarily performing that well on the export stage. And their CEO actually said at an AGM that they wanted to improve this line of business. They wanted to. So through the acquisition of basic commodities, they quickly dethroned Wisynco, which was for the year 2018 was the Manufacturer of the Year award. And by 2019, after declaring its intention to shed the sugar arm from operations, and while consolidating the dairy business, which they had bought out distribution rights from Nestle from certain products like a supplement. So these smart acquisitions and consolidations really turned Separate favor around. They even entered into a distribution agreement with Red Stripe, where they would have cultivated cassava and
We'll be using
utilize the cassava as a substitute for the beer, the sugar that they use in beer, because they initially Red Stripe had imported barley. However, barley prices were sort of fluctuating, and they said, okay, let's try something else. And Separate said, okay, cassava. And that's how they start a distribution chain with getting farmers to plant up cassava and then providing to Red Stripe. So a lot of strategic moves had been made by Separate coming into 2020. And so this just goes back to show us looking at future performance, how we expect a company to perform. I mean, this could have backfired, but at the end of the day, you want to always make educated decisions when trying to look into a company. A company that is in debt or doesn't have a good balance sheet doesn't necessarily mean it's a bad company going forward. It's just what the plans are and how much you believe in it as an individual.
Absolutely. Right. So here I basically just had an article on the September mid-September, outlining how the dividends would have worked out, right? So ordinarily, we know that dividends are cash paid out if you own shares in a company based out cash paid out of profits, right? However, we have one of the rare occasions where a company has also paid out shares of another company, which is every property managers fund, if you had over a certain amount of shares, which is a great indication that this company is healthy. They've had I forget the exact deal on how they acquired it, but they had some shares in Epley, paid it out for the people who had basically over $1 million worth of separate, right? So you can tell this is a good sign for investors, right? And have the calculation for finding out the dividend yield below. But most
And you
definitely.
want to explain what a dividend is, Justin?
Sure. So basically, a dividend is cash paid out from a company to its owners. And as a shareholder, right, whether it's one dedicated share you have at all, or if it's a million shares you have, right, you are a shareholder, you are a owner in that company. And as such, you are
Entitled.
you're the proportionate share of the profits, right? If the company decides to pay out dividends, that is, right? Because they don't always have to. Some companies don't choose to pay out dividends, and naturally, if they don't make any profits for the year, they can choose not to pay out dividends, right? But dividends are normally a good sign that they care about you as shareholders, that they care about your earnings, and it's just another way to earn money from earning.
Owning a stock. Other than capital appreciation, we can get it in the form of income, which is dividend.
Right. So, okay, great. This is what I was really looking forward to know. So here we have the income statement for separate, which you would have been seeing the developments for, right? So as we said, boom, they cut sugar off of their books. Two, they started to export further into Trinidad. They earned a
New
lot of
product
money
lines.
from sale of some property earlier in the quarter. And we can actually see some phenomenal results, right? So if you look over here to the right side of the columns, you'll see the 9 months ended report, right? So this is basically how the company has been faring for the last 9 months of 2020, from January to September, in comparison with 2019. So you can look at revenues. They earned about $4 billion more this year than 2019. And then we can go down across from gross profit, boom, $1 billion more. Operating profit, boom, $1.6 billion more. Profit before tax, boom, $1.6 billion more. And we get all the way down to net profit. And then, well, once you add on the, what do you call it now, other income that would have gotten from things that aren't necessarily their operations, right? Then we get into the total comprehensive income. So after they cut out all the expenses, all the things that would have negatively affected how much money they earned, then we get down to total comprehensive income. And in comparison between 2020 and 2019, it's staggering, right? That's the bottom right-hand part of the columns. So in 9 months into 2020, $2.6 billion compared to $469 million for 2019. Massive. And if you look at the quarter now, at the total same line, total comprehensive income for the 3 months ended 2020, which would have been, that's that now, from June to September, that's $1.3 billion. So let me say that again. 3 months out of 2020, from June to September, they made
July to September.
huh? Yeah,
July.
sorry, July. $1.3 billion compared to 2019, 9 months, where they only made 469 million. Massive. That means, look at that. It's a huge gain, to say the least. So all of these things play
Came
there.
from strategic moves made by the company within 2019. So while in 2019 the company was a bit down in both, it was down in net profit. Revenues were up, but profit was down. So this contrast shows that they had the ability to make money, but there were certain things that was pulling down the bottom line, creating losses. And mitigating that, going forward into 2020, the company got rid of its sugar arm and further bolstered its exportation arm. So all of that led to now the revenue being translated to profit. So a blowout quarter and a blowout 9 months.
Mm-hmm. So let's see what that actually looks like on the chart, right? So here we have the actually even indicated them, right? So that red line you would have seen was just after Corona would have touched down on our shores, right? Right after mid-March, the price started to fall from a little over $50 to.
All right, so Justin, just to consolidate now. I mean, let's move on to wrapping up because I think we've bored everybody for a long while. I mean, the synopsis of this is just how the stock price moved.
Self-explanatory.
So wrapping up.
So wrapping up, guys. As we said, information. You need to look on financials. You need to look on opportunities for growth. You need to look on their plans. You need to have an understanding of what the company has been doing, what its space is, and how are they planning to move forward from here, right? And so you know when to buy. You need to look into the news. You need to keep abreast of the different changes of the market events and things like that.
And so guys, any other information you want, follow us on Instagram, 876invest on Instagram, and you guys can email us 876invest@gmail.com. Wait, do you have the email there? Is it 876invest1@gmail.com? Yes. And we have a website. So you guys just reach out to us. Any further questions, we'll assist. Thank you for having us. Yeah.
All right, so that was a good presentation. I'm not seeing the moderator. I'm not sure if you're still here. Yeah, and it says I'm the host. So yeah, guys, it was a pleasure for having both me and 876 Invest, Justin and Nunes. And if you guys want to reach out to us, you could find us on Instagram as they stated. You could find me at Forex Professor and at Strictly Charts FX. We have a website also. And if anybody else have any more questions, you could. Oh, they're back. All right, perfect.
Hello?
Hello?
Can you hear me now?
Yes, we're hearing you.
Oh, sorry about that. Mona Connect just dropped.
Oh, that's nice.
Thank you for that presentation, by that way. It was really insightful, and we do have a couple of questions. One of the questions were, before the call dropped, how do you find out the financials for different companies?
Right. So the financials for the companies are posted to the Jamaica Stock Exchange website. I believe it's jamstockx.com. I can just type that into chat. Right. So you find out the financials from there. They have to be posted every quarter and annually. Right. So say for instance, the quarter ended September 30th. They have to be posted about 45 days after, within that time frame. Right. So you can find it. click the links, and you just go through them, and you can see how the company has been performing.
And another question was, this one was shared privately. Which companies are more user-friendly to new beginners within the stock exchange platform?
Okay, user friendly. I'm not entirely sure when you say user friendly, because when you say user friendly, I'm guessing you mean which would be kind of to investors or something like that. But pretty much companies tend to move the same, right? Because people move prices, right? It's all about whether people decide if they want to buy or if they want to sell based on their feelings. So some companies are definitely more stable than others, while some companies are a lot more volatile, right? So it's all about understanding the company a bit more, or understanding your goals as an investor yourself.
Okay. Another question is, who do you recommend as a best broker, or what to look out for when choosing a broker?
Okay, so as what you'd look out for in a broker is basically, if you're a beginner, you're definitely going to want somewhere with good customer service, with a lot of financial advisors who look like they know what they're doing and can give you some of the information, or at least a start for what you need to be looking for, right? Personally, I use Sagicor and Proven for my investments, because I have history with Sagicor. I have my bank over there. It's easy for me to fund in the money and fund it out to the bank account. And I personally really like the advisors over there, right? Always give always ready to help, always ready to have a good hand, pretty knowledgeable on what's going on. So yeah. Okay. I think I might have sent this privately.
And do you need to be working to start up with a broker?
Okay, so that's a good question. So one of the things the brokers are really looking out for is proof of income. And I understand that might be pretty difficult for you as a student, if you don't have a proof of income, if you're not working anywhere at the moment, or even if you're not self-employed and have some pay slips that you could put forward, or receipts, or history of what you're earning, right? But you could always say, listen, I get my money from my parents, and what the broker will do is they'll say, well, what they're going to ask for your parents' pay slips and things like that. And once you can provide it to say, look, my parents are employed, this is what they get paid, provide it to the bank, and then they should be able to open the account for you the same way.
Okay. Is there any more questions? Let me check over on YouTube. Okay, so I think that's it. So I really want to thank Jakeem from Strictly Charts FX, and Justin and David from 876 Invest for this very informative session. I hope that the UE commuting students would now have a different avenue to branch out in for. Oh, wait, final question, and then we wrap up. I don't think I understand this one. It says, what are the investments to invest in under these economic conditions?
Or
Um,
maybe what sectors?
Oh, maybe sectors. Yeah, that's
uh,
a good one.
well, that's, you really have to ask yourself, right? Because say for instance now, boom, you're looking at what are the effects of Corona? What are the effects that it's been having on the economy? And in particular, what has been slowing down because, right? So for example, easy answer is tourism, right? For a good amount of time, we had our borders closed. A lot of people aren't bunching up and jumbling up as one time. So tourism has been down, right? So you wouldn't expect a company like Dolphin Cove, for example, to be performing as well as it normally would, or Express Catering, which is a company based on in the airports, right? You wouldn't expect them to be performing as well because you're not getting as much people. People aren't stopping by to patronize them as much as they would have before. So we have to look into now is okay, well, what are people doing more of? What kind of companies are providing things and services that people are using more since work from home, since Corona, since they don't want to be outside as much anymore, things like that.
I'm looking to see if that answered the question.
Right.
Um,
Roger Mills.
I would also recommend that for me, who just started with the stock exchange thing, listen to podcasts, follow people on social media, try and get as much information from the people that have been practicing it as possible to see and to try and figure out what they're saying to see if that can influence you when you do your studying and research. Because sometimes as students, I can understand it might be a bit much for you to come home from school and read a company's financials or to like understand different things, but you have to also take into consideration that if you need income or if you need a way to increase your income, these are opportunities that are out there for you that you probably wouldn't have access to 5 years ago.
Right.
So I really want to thank the presenters for their very informative sessions. Follow them on social media at 876invest at SCFX, and the video will be on YouTube. And have a good day.
Thank you
Right.
for having
So
me.
much, yeah. Thanks for having me.
Thank you.